What's up, people? Well, let's stick with the serious Krull because serious Krull comes out when Krull's trying to hold back the rage and the pain and the anguish that he's suffering through. It was April Fool's yesterday, and as much as I wanted to make a funny video, really wasn't feeling up to it. I had things to do away from the office. Now, as April Fools would go, I tried to fool the market into convincing it that I was giving up on the up move. Joey dip hard, I was laying him to rest, and then that I thought the market would never have an up day ever again. Because I went long some more spies, thinking the S&P was going to hang on. And that was Monday going into the close. Felt real good about myself, especially now if you're new to the program also, I say the phrase embrace the horror. Now if you don't know me, maybe you've joined up a week or so ago, not exactly knowing how to participate in the fun and all the money-making opportunities that I bring to the table when I do actually work and don't stay at home and hang out with my kids and lose money because of that. Coming to the chat room, I said I was getting out of it. I bought some FSLR at the open. I sold it there at, I bought some at 131 and change, some more at 132 and change, sold it all at 134 and change. And jokingly around, we all said, oh, we'll probably go to 137 by sometime today. I noticed it did hit 137 throughout in sometime during the day. Also, we must be gapping up today because apparently the world is saved again. The world is saved. The savior of companies now, I'm going to wear the jacket again because the savior of companies has to get his due because the savior of companies did save the market that day. February 27th, I think it was, where I said GE is the stealth bottom of this market. If we all, finally, there wasn't that capitulation, throw the baby out with the bathwater and all those great sayings. There wasn't that moment where everybody said, this is it. We have that intraday V bottom reversal. It happened to be the GE. That day when we thought GE was going out of business, that was the capitulation. That was it. There was one more stipulation that day. There was one more thing that happened that was like a stealth capitulation, stealth bottom. But whatever the case is, right now, Joey dip hard, underlying bid. The hardest thing about buying those dips, well, if you're a technical analysis, you're buying dips based on support and resistance. There's more to it than just gut feeling. But when you're buying something that's close to support, and if it breaks the support, you get out. You take your loss. Granted, it might only last for 2 or 3 days in this market. As soon as it breaks that support, it finds new support and then rallies off that spot. That's why this market's very difficult to trade. But Joey dip hard, and I got an email. What's up with X? What's up? Joey dip hard. What? It dipped a little bit harder than we thought it would. But where is it now? 24 bid. Where did I say it would be? And you got to remember, most of the stuff that we're talking about, we're in the chat room. These are day trades. These are stocks that we're making moves for the day. Oh, by the way, I told you to be buying Baidu that day. What was it, a couple days ago at 170? My witness of malice when I was telling him, now we got to buy it because it'll probably go right back up to 200. Joey dip hard strikes again. Moral of the story is Microsoft's been going up. Sun Micro, it's got a takeover bid going on it. The bad news has been taken and ran with, a la the Hig, another company that I saved. All the companies going out of business have sort of been taken off the table. So the speculators are getting back. And don't forget about the real reason that we're going up. Short squeezes, I don't want to miss the boat mentality. I don't know if this is going to be the beginning of the new bull market. If you're an investor, you're hoping that's what it is. My 2018 fund is hoping that's what it is. But at the same time, I'd rather try to get in and get out. So I'm trying to do all three things. I'm trying to build a portfolio that I'm looking for 10 years. It's distracting when you're building a portfolio and you're seeing your stocks that you're in there that are going down. You think maybe I should sell them out of them and try to buy them cheaper. But you know what happens then? You're talking about a couple of points here and there where and then your main goal of holding these stocks for 10 years goes out the window. Then with swing trading also, you got to set your parameters. You got to know when you want to get out and when you want to get in, and your stops have to be just, you put them in there and you forget about it. And as far as day trading is concerned, the nonsense will continue probably forever. And of course, my main fear is that the market eventually, if we do start selling off again, which you can't say we're not going to do it. The capitulation I wanted to talk about also. Not only was GE going out of business, but gold was going to $2,000 that week. Remember that? It was the sweeping the nation. Buy gold, send your gold through the mail, melt it down, and get a brick sent to your house because gold's going to $2,000. That commercial is the best. You see this gold I'm holding in my hand? It's worth $1,000 right now. If gold goes to $2,000 an ounce, this gold will be worth $2,000. Thanks for that. Nothing better than the other one is channeling stocks. If you knew when a stock was going to go up before it went up, you could cash in on that knowledge. Wait for it. Wow. Fantastic. But channeling stocks, in all that lunacy of that commercial about buying stocks when they're going down and selling them when they're going up, as asinine as that commercial is, that's exactly what we're looking to do in this market. You're looking for stocks that are at support. If they hold support, you hang on to them. If they break, you get out. That's why that Baidu, it's virtually impossible to make these big moves on the stock. To obtain, when you see Baidu's up 8, generally I'm making a point on that stock that day at most, because I'm trading it intraday. I'm never holding the Baidu overnight, except for the, I have the 100 in the 2018 account. That's regardless. The thing about this Baidu is that the supports and resistances are always breached in cyberspace. That's why they should disallow the gap ups. But at the same time, if you're watching your chart and a stock gaps above that resistance or gaps below the trend lines or whatever, on the opening move, it tries to get back to where it came from. Or the stock will, either it takes a day or two, but it will get back to that gap and fill the gap. That's why you can just trade around these gaps, try to make money that way. But as the market opens up, all I could say is, fuck! Okay? Because I really was looking forward to buying some Baidu when it broke 180. Now, the stock closed at 174.77. Oh, why didn't I buy it if I thought it was going to break 80? I didn't know it was going to break 180. I'm a trader, and I was looking for it to break 180. Hopefully, that was going to happen in a trading day where it opened up at 175. Let's say it opened up at 176 today, or 177, and then it started getting strong, and then it would go to 180. But no, it's gapped up $9.85. So what does that mean? That means hit myself on the head with a hammer and go play with my child, because there's no goddamn way I'm buying the stock today. If anything, I'll be looking to short it. And you know what? That's it. I mean, when the market takes away the opportunity that I was planning on, of course there's going to be an opportunity today to make money. I mean, the fade, this thing's going to happen. I mean, if it hits, right now, Baidu printed at 184.99. If I was trading, I'd be short right now, right here at 184.50. Boom. I'd be making $400 right now as we speak. Bang. Cashed out. Boom. See how simple that was? The print was 184.50 bid. Bang. We could have got print right here. 184. 184.09. We definitely could have got that print. So there's money to be made in the market. And we're talking about 1,000 shares. We're talking about 13 seconds right there. We just made $500. People need to work sometimes a week for that money. And I'm just showing you how you can do it. Playing the fade, my friend. Stock's gapped up 10 points. Where's it going to go? Now, just fell another 70 cents. Boom, just like that. Moral of the story. I would have taken my quick $500 and then you could have made another. It just dipped. Oh, it was just a dip. You probably wouldn't have got that print regardless. The point is, not buying anything until the market dips hard again. All right? Oh, let me say hi. Come here. You want to say hello? All right. I gotta go. Joey Dip Hard is looking for a dip in hard. See you later.